Bitcoin Physics of Bitcoin show. It's episode 47. Is that correct, Stephen?
That is correct.
And today is the 17th of June. I am in Italy, Torino, so it's pretty early in the US. It should be 9 a.m. On the East Coast. It should be 6 a.m. on the California coast, where I used to be. It's very early. And 3 p.m. here in Italy. What is the time over there in Thailand? Stephen, can you hear me? Stephen? Stephen, can you hear me?
I can hear you. Can you hear me?
Okay. I was asking you what is the time over there. It seems you have some problem in hearing me.
Yeah, it's a weak connection.
Okay, it doesn't matter.
I'm going to try to switch to a different network. I may have to log in back.
Okay. I will take it from here and come back if you need to come back. Anyway, we can see you. It's very fuzzy. There is some problem with the connection. But anyway, guys, so you can see I am here in the office of the Scientific Bitcoin Institute. This is our logo. It's a very nice office. We are in a very amazing place in Torino. Just to give you a feeling, so that I will give you we are getting a camera and I will bring it around. It's a hub that this company called Folgore Ventures. They are very involved in supporting different Bitcoin projects, very generous. They are helping a lot of startups. They usually invest in early startups in Bitcoin, the Bitcoin ecosystem, but they're also doing projects like these that are not necessarily linked on trying to make money in the ecosystem, but actually supporting it and helping it. So this is a hub. The first floor, there is an interactive display. Like I said, in the next shows, when we get the camera, I will give you a tour of the place. It's pretty amazing. So on the first floor, it is actually in this big square, one of the main squares of these large cities in Torino. Very beautiful 19th century buildings. There is actually one of the biggest Italian historical banks in the same square. That is interesting, and so people walk by and they see all these books. There are books about Bitcoin. There are displays. There is an interactive kind of experience where you learn about different aspects of Bitcoin. There are videos, there are displays, and the experience ends being in Italy with you receiving a little bit of Satoshi on a wallet. You download the wallet, you receive using a code or whatever, a little bit of Satoshi, and then you can buy a coffee with this Satoshi. You can get an espresso. So it's a really cool learning experience. And then there are several floors where, for example, in our floor there is another company related to Bitcoin. It's Blockstream. There are different researchers, people that are working in improving their products. And so in this institute is here. We have a relatively nice office where our students are going to come. And for example, today we have one of the research fellows, Adriano. In fact, I wanted to introduce everybody. Adriano is here to work with us on different research projects. He studies at a very prestigious university in Rome. It's called the La Sapienza, and then eventually, when he finished, he will move to Torino to work with us and the local university in Torino. So it's a serious project with a lot of collaborators and people who want to understand better Bitcoin. Thank you, Adriano. One of these days, I will have Adriano maybe presenting. He's just visiting today, but they can maybe present one of his papers. I already posted a couple of papers. You can go on our, let's see if I can actually share with you the web page. So we have a nice web page. It's called the Scientific Bitcoin. So you can find it at Scientific Bitcoin Institute.org, not .com, but .org. And let me see if I can share it with you. Okay, this one. Yes. And we have, some of these pages are still kind of placeholders. But if you go under, for example, publications, you see our paper. There are very good news about this paper. First of all, we got, if you go on Zenodo, that is where you can find it right now, there are 14,000 views. That is unbelievable for a scientific paper, and 12,000 downloads. And this paper has been submitted to a scientific journal. I don't want to give you too many details because it's still a work in progress, but we went through the first round of peer review, and we got very nice feedback. I was very surprised because I didn't know if the topic itself, let's say Bitcoin in general, Bitcoin as a topic, in fact, it's not there yet on the website, but I want to add a page where you can find a lot of articles, like scientific articles on Bitcoin, that are now written by the Institute, but are very interesting, very relevant. We mention all the time this physicist, his name is Sornet. He already wrote 3 different papers on Bitcoin. And one of them is even kind of related to some of these long-term trajectory. Basically, we talk about the Metcalfe law, even if we found it before they did. So we are kind of expanding on that work. And so in general, it's an okay topic, has been recognized as a valid scientific topic. Is mostly this idea, that of a power law in general, and how we could prove that there is a power law. Because even the particular paper didn't necessarily mention a power law. They say that there was some kind of a long-term trajectory. That is the Metcalfe law, so it's implied is a power law. But they didn't emphasize the scaling property. That is what is really the most important, relevant thing about power laws. So I was just worried in general about the type of background feedback that they were going to give us, and it was actually very positive. They liked the paper. In fact, one of the authors said exactly, one of the reviewers say exactly that. I like this paper. And the other one had also very positive things to say. The second reviewer was a little bit more technical. He wanted to do further tests, in particular to show co-integration is something that in physics we almost never use, but it's something that is supposed to be a big deal in econometrics. And so it basically shows that there is it's not a, let's say, trivial or maybe spurious relationship between price and addresses. It is kind of a critical point, right? That is the Metcalfe law. And I think even the Sornet paper never did the test, while our paper, the paper itself has at least 5-6 different tests to show that it's a real phenomenon. and they wanted to do a couple of more, and we did, and they passed the test, and we rewrote the paper. I think it's now even a better paper than what you find here as a preview, and hopefully they will accept our, this is also explained for the people that maybe never publish a paper, right? It's a process where it's probably one of the best processes. I know that a lot of the general public has skepticism about science and how science works, but it's really one of the most, let's say, pure, beautiful activities in humanity, because you actually write something, you go through the discovery process, then you propose to the community what you're doing, right? And there are different levels. The peer review, let's say, is not even the end, it's the beginning, because there are, for example, you get only 2 reviewers, it's not like hundreds of them, and these reviewers give you feedback. Sometimes you don't completely agree on what they say, because you kind of are the expert in the field, right? So some of the pushback seems kind of trivial to you, but we usually try to make the reviewers happy, because they work mostly for free. They don't get even paid. These are professors that are or experts in the field that take their own free time, and they review these papers, and they contribute to this discovery process, right? And they give you feedback. Very rarely, I don't know, Stephen, what is your experience? I think only one time I found a reviewer that was so obstinate and they didn't understand what I was doing, and it doesn't matter what I did, he was never happy. But it was one single case, and I wrote more than 100 papers in my career, in collaboration with other people. But most of the times, when you actually go through, you're humble and you're accepting the feedback from the reviewers, the paper becomes better. And so I wish that process was done in so many other human activities, where you would do something, then you get reviewed, you get feedback, you're trying to be humble towards these people that are your colleagues, and you improve what you're doing by that, right? Now, there are certain processes like the market, for example, is also a mechanism for feedback, etc. But this process of peer review has its limitations, but it's really powerful in improving scientific discovery. Then, of course, it's not ended there, because when you put the paper in the community, then other people try to replicate your results. In fact, right now I see a lot of papers that people are actually publishing where they reference your work, right, our work. And it's possible that in the future years there will be papers that argue against, right? I think actually me and Stephen know of at least one paper that tried to propose a different model, but then we came up with the conclusion that in the end our model is better over the long term. So basically create an entire field of studies where people debate, study, go deeper, on this field. So this is exactly what we wanted to do as an institute, to create this discourse, to bring different scholars in studying Bitcoin, not just as an asset, but as an interesting phenomena, and that goes beyond. And, this also reinforces, of course, the investment thesis, right? Because in particular, if we are showing there is a long-term trajectory, is not a Ponzi scheme, etc., that contributes to that. But it's not really the main focus. So this is the book, and these are the papers that actually Adriano wrote, our new research fellow. Very nice papers. So these are still preprint, and they are work in progress. We are actually reviewing them together with Adriano. Probably eventually we will ask the help of a math department at the local university here, because they are pretty intense papers. So if you actually start to read them, differently from the power law, where most of the math is high school math, I will say, these papers are much more involved in terms of the math of the ideas. But just to give you a feeling of what Adriano is trying to do, is trying to go from the bottom up, right? Trying to come up with some kind of simplified model using agents where you start with some assumptions. So there are different type of model, right? Where many times they say the power law is a model. It's different from this kind of model in the sense it's an empirical model, mathematical model of Bitcoin's behavior. But it doesn't make people say sometimes, oh, you made this assumption, you made this assumption. No, the power law has basically zero assumptions. You just take the data and you plot it in a particular way, in a particular space, that is a log space, and then it's evident, it's pretty clear what is the pattern, because it's a kind of a straight line, so it has to be a power law. This is really what we mean usually in physics for model, that is basically create some kind of little toy where you simplify as possible the conditions, and still you can recreate very complex behavior. And then you deduce something from this model, right? In this case, for example, it says, imagine there are different agents working at different levels, at different, so that is something that many people are familiar with, right? For example, there is retail, there are small investment groups, when there are big banks, when there is the government, and so he's looking at different layers of in terms of size and market cap and so on. And say if you have these different layers of involvement, the different agents, then their interactions will produce a power law. Now, under certain assumptions and under certain simplifications, but it's very cool because it explains how we create a power law in adoption, price, and so on by the interaction of these different agents. So it's really, I think, the first step in trying to go deeper in understanding why Bitcoin is so different from other systems, because this type of dynamics are going to be very, very specific to Bitcoin, and is using the idea of game theory, dynamical systems. So it's very cool paper, and this one is a more general paper where it's actually trying to make a relationship, trying to show that there is a one-to-one relationship between certain dynamical models like prey-predator that people use in ecology to try to understand how populations of different animals interact with each other, like a prey and the predators, and economics and game theory that involves different type of markets. So this is kind of actually the foundation for this other paper. Basically, it takes the ideas. This is actually interesting mathematical result in itself. If you show that this particular game theory is associated to dynamical systems, and then he applies specifically this particular approach to Bitcoin. So it's very cool approach. He has a third one paper, but it's a work in progress. So I think I really love this approach because it's a more theoretical approach that will kind of work well with our empirical results. And so it could be an entire field of studies. It is exactly what we are trying to do as an institute. And then the other thing I want to show you on the website, that is really cool. We are working a lot on the website. Most of these, by the way, is whole vibe coding that we are doing with Claude. We have an established workflow, and we are being very productive in making this website interesting and useful. Sign up for the newsletter, okay? So you can get updates, and we will start to send these newsletters every 2 weeks with updates, articles, discussions, and so on. But under news and events, if you scroll all the way down, there is this event journal. And the event journal, basically, because of we are starting to get really, really busy, in particular in Europe. Me and Stephen were talking about even going soon to Hong Kong. So these are all the different type of conferences where we participated as an institute. Me representing the institute. Hopefully, in the Asian one, me and Stephen will be there together. That will be amazing because I never met physically Stephen. But we went to San Marino. You can read about this event was really cool. First of all, here you can see there is the San Marino TV that came there, and San Marino is this, for people who don't know, maybe in particular in the US, it's a very small nation, right? Italy has two small nations inside it. It's a territory. One is Vatican City, that is literally a chunk of a city of Rome, very, very small, but it's still considered his own nation, with the Pope being basically the king of that nation. They have their own stamps, etc., their own government. Same thing with San Marino. This is an ancient republic, all the way to, they say, all the way to the 900 after Christ. But it's a kind of a legend more. But we have historical document that it existed since the 1200s, something like that. And has been independent all this time. Even when Italy unified, many small little nations joined together to form Italy. They decided to stay independent. Now, this could be used. This is relevant for Bitcoin because some other small nations, like Malta, for example, right, that is just below Italy, just below the island of Italy, they did a lot of things to support the Bitcoin ecosystem, pass a lot of interesting, very good law, very favorable laws. So a lot of firms moved to Malta. Adam's Beck, for example, he lives in Malta. So San Marino could do similar things, but they are very, I talked with the local people. We were invited basically by a bank that is called Cassa di Risparmio, that is trying to offer products based on Bitcoin. That is the relevance. It was really cool because we have here a bank that is actually trying to reach to serve their customer, offering custody. They want to buy, they can buy Bitcoin because I know we want to do it independently, but many people are not able to do it. And if there is a bank behind it, they feel more secure. So I know that some people are against all this stuff, but actually it's a good thing, right? Because it's giving access to Bitcoin to people that will not get access otherwise. But you still have a custody because it's a kind of three-way custody through the bank and another third party that through which you can buy, basically an exchange where you can buy Bitcoins in San Marino. And so we presented there. They were very happy about the power law, mostly told them about the power law. I think there was even a politician, like the Secretary of State of San Marino, that came there. So it was a big, important local event, I think. So we are trying, as an institute, to go there and have a kind of an official role. You see, I even have a suit because I'm taking seriously my official role to explain that there is a scientific way of understanding Bitcoin. But this was another event, Plan B Waves. It was very beautiful near the sea. This was more like local vibes, nice community of Bitcoiners all over Italy. They came here because it's a beautiful place. Giacomo Zucco was there. You can see it's a very party-like environment. It was really cool. Well, we had amazing food near the sea. Because, of course, this is how Bitcoiners do things in Italy, right? We like to be all around a big table and have food, like you can see in this video. Fantastic food. But it was also very good presentation. In particular, I loved Giacomo Zucco, right? He's a relatively famous Italian Bitcoiner. He's the person that created Plan B, right, in Lugano. He did a very good presentation on quantum computing. In fact, I'm going to try to get it and maybe even post it in our website. Very, very well done. Of course, his conclusion was that it's not a danger, like imminent danger, as some people claim to be. But it's kind of our position, right? It's Stephen agrees on that. And then we went to Praga. There was a corporate day that was very similar to what we did in San Marino, but this time we were many different banks, investment funds. So this was more tailored to companies, right? We want to become treasury companies or funds, and we want to include Bitcoin. But again, I know that many people are against all this development. I think it's actually fundamental and necessary for the evolution of Bitcoin to involve everybody because Bitcoin doesn't change. All the good things about Bitcoin, you having your keys, etc., are still there. They are not changing. They are not modified. But it's also good that more capital comes into the ecosystem. We can do more things in this way, and people that would never have access to Bitcoin can have access to Bitcoin through these other financial instruments. I think it's a good development. So this was a very nice event, in a beautiful place. Saylor was there, Mahler was there. In fact, this is where there was this recent debate between Mahler and Saylor. It happened at this corporate day. Then, of course, it's not there yet because we are working on updating the event. Basically, we are explaining what we did as event, what the event was about. We have videos, where you can see all the different activities that we do. And Prague was also amazing. I was on the main stage. You will see the video soon. And it was a really constructive meeting. We had so many encounters, so many people telling us that they are looking at the power law. I feel that it's becoming more and more accepted in the community. So it was a great experience. Anyway, this is mostly what I'm going to discuss today, just to give you some updates. There are more things coming up. I'm going to give you a preview, not too many details, but I'm working on a beautiful dashboard for the members, so people eventually can become a member of the Institute. You will get a hat with Scientific Bitcoin logo, shirt, different merch, but also you will be actually an official member of the Institute, right? You can support the Institute and be proud of sponsoring Bitcoin Science. And you will get a bunch of perks, like we will have a beautiful dashboard with news about Bitcoin and also charts. Bitcoin versus gold, Bitcoin versus wheat.
Corn.
Corn about published shows that is also powered or whatever. You will all updated daily, so you can see different metrics about Bitcoin, but also the ecosystem. Maybe information about what the different treasury companies are doing. All kinds of different information, almost like a Bloomberg terminal about Bitcoin, and it will be part of the perks that you will get to be a member of the Institute. Okay? All right. So if you have questions on this stuff, let me know in the comments. All right. I think it's time for Stephen to do his presentation. I see this stuff being kind of in the middle, covers my face. All right, Stephen, are you ready for your presentation?
I am.
Okay.
Let's share this window. Can you hear me clearly? Am I clear?
Yes, I was muting myself. Go ahead.
Okay. All right. This is number 47. I've titled this one Two Leashes for the Dog. It will become apparent. The owner is the power law, and the dog is the deviations, you know, the bubbles and the troughs and the oscillations around the core power law trend. So that's the analogy here. That's most of the presentation today. And this is the agenda. Before I get into that part about the owner and their dog, I just want to show one slide on the power law realized cap, which is, you know, all the capital that's entering Bitcoin. And I recently did a regression on that. I don't think anyone's ever done that before. I checked. I couldn't find an example of it. I don't know if you've done that in the past, Giovanni, but if you take the realized cap, which is measuring, you know, the last price that every coin traded at or every fraction traded at, if you rationalize it per coin by the number of coins outstanding, it has the same units as a price. And it follows a power law that's very close to the other power law exponents that we see. And then the rest of this is the price residuals for the regular price. And what I've done is I've divided things into two envelopes, one above and below, because they have a different decay in their amplitudes, and there's more volatility to the upside than there is to the downside. It's always been that way. So I measure both of those separately in order to calculate z-scores on both sides of the power law. And when you do that, you find out that right now we're at the lowest z-score ever. And then I've got a couple of slides on springback times. How long might it take us to get back to the power law? And then I've got a closing slide that talks about the statistical tests. So one of the reviewers of our paper on the mechanistic power law explanation asked us to, you know, do these econometric tests that Giovanni mentioned. And we did 4 different tests, and both Giovanni and I did those independently, and we find that we pass all those tests. So I'll show a quick summary of that as well. So this is the realized cap per coin power law regression. So you take the last traded price for every coin or fraction, you add that up over the whole history, and you have a certain market cap in dollars at a given point in time. You also have a certain number of coins at that point of time. So you end up with the ability to calculate the realized cap per coin, which is what I've done. And so the line that curves is that. And you can see it extends over 7 orders of magnitude. This, of course, is a log-log plot because, you know, we want to look at power laws. We expect to see a straight line on a log-log chart. And so the age is on the x-axis is also logarithmic, and if the realized cap is now converted into a price equivalent. So right now, the realized cap is some number like really similar to what the price is. It's in that sort of 50, 60,000 range. It's still, I think, slightly lower. But it does get converted into price in this process, and you run a regression through it. Ordinary least squares, you find the index is 5.81. So that's very close to the 5.7 you find with ordinary least squares for price. Or if you do the scaling test, where you just look for the scaling between many points chosen, you get something like 5.74. So they're all very close together. The R squared is high. It's even slightly higher than the R squared on the price regression at 0.965. And I don't have the plot of it that I'm showing today, but I did put up an article, and I think I've got it in the article, and that's on Substack, that the volatility for this quantity falls as an inverse of the age, close to a reciprocal, a little more slowly. It's 1 over t to the 0.83 power. So it's about 5/6, t to the inverse 5/6. Okay, now this is the regular price. And so on the left, you have the residuals. It's my latest ordinary least squares with data up until late May. So it showed a 5.67 power law, R squared at 0.962. And here are the residuals after you subtract the power law, and you can see it's not a Gaussian, right? It's not a log normal. On the y-axis, we have the density, and on the overall axis, we have a two-sided z-score that I'm going to show you how I calculate that. But really, it's kind of more of a bimodal distribution. If you just take the residuals I just showed you and say, how do those average out year by year, and then how do they fall off with time? They fall off as an inverse reciprocal with an offset, and the equation is just 4 divided by the age plus 8. So it's a relatively slow fall, but it's very clearly a fall. And if you go from age 2 to age 16, it's falling from 0.4 down to 4 over 24, 0.16, and we're at age 17 and a half now. So we're closer to 0.15. So it's a very distinct decrease in the volatility that you can just see when you look at the chart. Here, the R squared of the fit is 0.51. It's not perfect, but it's quite a good fit for general, economics, financial fits. This is the residual distribution using the z-scores with a dual Gaussian, and a dual Gaussian fits much better. And you can see there's a lot of, there's a big peak at -1, roughly -1. It's actually -0.9 is the peak. And that's, so when you're below the power law by roughly 1 standard deviation, if you use this kind of overall distribution. And then it's more spread out on the upper side. So we're sort of clipped between -2 being the lowest on the downside, but we go all the way up to +3 standard deviations on the upside. And the bimodal is better by a delta in the Akike information criteria by over 1,000, which is a huge difference. So it's clearly a better fit with the bimodal. So given that, I use 2 envelopes. So I just take the residuals above the line here. So this is the power law that I showed you before for the regular prices. That's the 0 line here. You subtract that out, you get the residuals, that power law, and you've seen residuals like this many times, but I've just fit a positive envelope and then a below the power law envelope, the negative in the green. And so they have different, somewhat different equations and formulae. The positive envelope falls much more quickly. They're both reciprocal plus offset, but in the case of the positive envelope, the offset is 2.5 years. And for the negative envelope, it's much slower. It's decreasing in amplitude, but much more slowly. It's the inverse of age plus 9 years. And the R squared is 0.66. It's very good on the positive envelope, and it's pretty good for the negative envelope. So once you do that, once you have these 2 envelopes, you can compute z-scores. You have to do a conversion between the amplitudes that I just showed you, and then you're making an assumption about these dual Gaussians on either side. Then you can compute sigma, which is the standard deviation. You basically take the amplitudes on either side, and you have to multiply by this factor, square root of pi over 2. Turns out to be about 1.25. And then that gives you your standard deviations. And from that, you can calculate your z-scores, which is just the ratio of the residual to the standard deviation on either side of the line, depending. And so when you do that, you get normalized residuals, normalized z-scores, and normalized between the two-sided nature, of Bitcoin. And so then you're more likely to see things really sitting more or less between -2 and +2, you still get a little more activity going above +2. And both the expected growth rate and the residual envelope seem to be governed, by these scale invariant declines. The signal here, of course, is just the power law at the zero line. And this shows how the Sharpe ratio varies with time. Now, in order to do this, I didn't do the two-sided nature. I used what's really more conservative, which is the overall standard deviation from fitting all the residuals, and that does underestimate the upside that you have. And so this is a conservative look at how the Sharpe ratio evolves with time. Now, we know the expected return from the power law. It just depends on 1 + 1 over the age, in brackets, raised to our power, which is 5.7 roughly, and then you subtract 1 to get a percentage. So that's how you compute this second column of expected return, mu, which drops from 900% all the way down to currently something like 37% at age 17.4. And then the next column over is the standard deviation, or the volatility, which falls from 100% at age 2 down to right now about 42%. And so currently, the expected return and the standard deviation are quite close. And you can form a Sharpe ratio, which essentially is just the ratio of those two numbers, the mean expected return divided by the standard deviation. Formally, one adds a risk-free rate and subtracts that from the expected return. Right now that would be about 4%. It doesn't change the ratios too much here. The main thing you notice is that the Sharpe ratio was very, very high. It was above 1 until age 12, but it continues to be quite high even now at 0.89, almost 0.9. And it goes in and has this slow decline, and it flattens out, and it will never drop below 0.5. If you go out to infinity, based on the calibration for the volatility, it would stay slightly above 0.5. So it would be healthy Sharpe ratio. Now, in terms of portfolio allocation, you can have a continuous Kelly, and that number turns out to be really high because you divide by the square of the volatility. And so that gives you actually numbers over 100%, but not something I recommend, using leverage. This is a QQ plot. It just measures the residuals against themselves, the observed values and the quantiles. And you just basically want it to be monotonic. It's clearly not perfectly log normal, but it's reasonable in the mid-range between -2 and +2. And then when you get to extreme quantiles, what you do notice from the way this is curved is that you have underweight in terms of extreme values. So on the downside, you really don't get below -2 in terms of z-scores. And on the upside, you don't get above +3, except recently. I measured on June 6th, when we dropped to 61,000, that the z-score was -2.06. And searching back in history, I found that that is the lowest, with this sort of normalization of the z-score, taking the volatility the way it's dropped over time. With that normalized z-score, this is the lowest in history. It's even lower than the 2022 trough that happened at the end of 2022 and the beginning of 2023. And that never quite reached -2. And here we reached -2.06. So what that says, of course, is that we expect that to hold. In fact, it has held. We've bounced back to about 65,000 currently. We did a double bottom with the February low. So hopefully that all holds. And there are other indications of support, like the 200-week moving average. So the upside is significant. And then so I started thinking about, well, how long does it take to recover if you cross the midline, which is the power law of the, the zero level of the residuals, and you cross upward and then fall back and go downward into a trough and rise up again. First of all, there have been like 30 crossings. If you put a small buffer zone of about 0.02 in log price, which you call a dead band, which is a 4.7% band on either side of the zero line, then you measure actually 30 crossings. So there are 29 intervals that you can measure. And the minimum was 3 days. The maximum was long, 871 days. The median 57, the mean half a year. And right now we're actually longer than the mean interval. If you say that it was in February. I haven't looked at it really closely to see whether we went below February, but I don't think we did. Sorry, that's the wrong direction. And then this is the distribution of springback times. On the left, it's the up crossings, and then how long does it take to get back to the power law falling down? And on the other side is the other direction. The fact that we keep snapping back to the power law trend actually manifests the idea of a stationary residual process, which is exactly what these econometric tests that we were asked to run indicate. I couldn't find any significant variation with age or log age. It really just depends how long it takes to get back to the power law mean, which of course is a rising function. Really just depends on how large your excursion was in general, and you kind of see that from these two plots. These are the statistical tests that we ran. So they all support the power law is real, that we also saw with this sort of distribution of springback. The names of these tests are ADF for augmented Dickey-Fuller, Phillips-Perron, this KPSS, I can't remember all the names in that. They all test for whether it's a stationary series or not. So log price, which is the first row, all three of these tests showed that it's non-stationary. In other words, price keeps going up, right? According to the power law, that's what you expect. If you take the delta log price in the traditional way the finance people do, the econometricians do, which is the daily volatility, it's actually larger than the drift. Everything's stationary. All these tests show that it's stationary. So that's good. It's what you expect. If you do it by taking the power law, which is really a better test given, the phenomena that we're measuring here, with the OLS residuals from the power law, again, it passes all the tests as stationary. In other words, just as we've seen from all these crossings, we keep returning to the power law. And there's one more test called Granger, and that's for co-integration. And indeed, it showed co-integration between Bitcoin price and Bitcoin age. And suggested reading, if you haven't read it, the paper, you go to the website /research at scientificbitcoininstitute.org. Giovanni just showed you that page. You can find the link to the paper, and you can find the link to Giovanni's book, The Physics of Bitcoin. And so please read those if you haven't. The paper now has over 12,000 downloads. And with that, thank you very much. Giovanni, are you there? I'm looking.
I am here. I'm back.
Okay.
I think I say a bunch of things that people couldn't hear because I was off.
Yeah.
Now, can you
We've
hear
got
me?
some comments. I just see one question so far.
Yeah, exactly. Yeah, I have all this writing. Let's see if I can do something. Right. Okay. Yes, people can see me better. Anyway, let's go to the questions. Chat. Okay. So what is this one? Given a weakness of this time frame, your view low later in quarter four. I don't know what these balloons are about. Uh, I was shocked to see 60K again after that rally. You want to answer this question?
Yeah, I'll be happy to take that. So the 4-year cycle boys were not correct about a bubble. We didn't have a bubble in 2025. And of course, they were wrong about 2011, if you go through the full history. So all the studies that we've done have shown that there's much more power in the log periodicity fundamental than there is in the 4-year cycle. There is a small 4-year cycle. It looks to be more like in the 3.5 to 3.75. With the 3.8 would be the mean time between halvings. They were certainly right in the sense that there was a trough, and it was quite a serious one. But we also saw that in the log periodicity that curve was turning down as well, and was explaining some of it, but not all of it. And I think there were certainly macro factors as well that were going on. What I've seen in the log periodicity says that right now it's a net negative contribution. However, its slope is upward. So it's now supportive. And, both the power law and the fundamental log periodic mode and additional modes are heading upwards. So everything should be supportive, through the rest of this year and through next year is my view.
Yeah, I agree too. It's more complicated, the 4-year cycle thing. Stephen has done a lot of work. I verify his work. Basically, if you're trying to stick with the 4 years picture, mostly because, yes, there was a 4 years interval between some of the peaks. Now, part of the problem is also to interpret the peaks, because some of what, if you look at the entire structure of what people call the last couple of cycles, they were not super clear, and when you run the log periodic version of these oscillations, it looks like almost like what we consider separate cycles. They are actually oscillations of the subharmonics. So they are basically, there is not a real 4-year cycle. It looks like, because in the time frames they are looking at, some of these log oscillations kind of hit on the 4 years. So it's almost kind of an illusion. So really, the way to, now we did have some indirect observation, because if 4-year cycle people, and for some time I was one of them, because I went back and forth. I mentioned log periodicity a long time ago, because mostly I knew about the word Fornet. I was trying to verify this oscillation, and it was clear from the beginning, because we had a 2-year oscillation, 2-year distance between the first big peak and the second one. Then it became a 4-year distance. So it kind of seemed maybe there is some kind of log periodicity. And then because we had another one, right, soon after 4 years, it looked like, okay, maybe this idea of log periodicity was wrong. We are going back to it mostly because if the pure Fourier cycle was correct, we should have seen a peak in last year, in the end of 2025, and we didn't see one. And I think some of the Fourier's camp is kind of coping, saying, well, we still kind of peaked around 125, but it was not a peak. It was just touching the power law, was barely touching the power law. We never went much above the power law. So yeah, okay, it happened more or less at the end of the year. It was an all-time high, but it was not one of these huge big deviation from the power law. That even with the decay of the peaks, we should have had at least an 80% deviation, and we didn't see it. So while the log periodic version resolved this kind of conundrum by saying, yeah, you should not have seen a peak. The log periodic model doesn't predict a peak. It predicts actually a small correction from the power law. That is basically what we are experiencing right now. So it's really much more consistent with what we are seeing right now. Now, I think this will be resolved by what we are going to see in the future, because the two approaches give two different results, right? When the log periodicity says we should see the next peak, Stephen.
Yeah, well, it says that we should see the fundamental with the phase shift peaks in 2028. So we've got very supportive conditions between it and more or less the harmonics, the next two harmonics for the next couple of years. So and really into 2029 still. But we passed the peak, but still, yeah.
Right. Because the 4 years will say, because let's say we should have added in the beginning of 2026 or end of 2025, it should be 29. So it will be the difference between something significant in 28 versus 29.
And I can show you a slide if you like. I've got one slide with a projection.
Yeah, sure.
Yeah. Okay, let me.
And this is how science works. This is why this approach of being scientific is really the best approach. Because look, we don't care which one is correct. We want to understand the coin. So it's not about ego or who was right, who was wrong. We want to learn from the coin. So we are proposing different models. We are looking at the data. We tested the Fourier model. It seems that it's less precise, it's less weak, given the data is more weak, given the data we have available. The log periodic approach seems more realistic, more coherent with the data that we have.
I think now, you have to as we accumulate more
data, this is how science works. So you select one model versus another because this is how science works. You collect more information and then you converge towards the truth. We will see which one is more correct. And,
can you give me permission to share this slide?
Yeah, absolutely. Go ahead.
There it is. Okay. So basically, this is just the blue curve is kind of a minimum that has the fundamental plus one additional harmonic mode. The orange is more accurate, but it includes phase drift. And the green has two fundamentals. It doesn't have both phase drift and decay. So these are three different models with somewhat different assumptions. And the average of it is this red dash line. And so what it's saying is that right now, we're below zero, right? So right now, the log periodicity is not supportive. It's subtracting from performance. It's destructive interference, if you will, but it's rising. right? So it's becoming more supportive as we get into next year, and it continues rising through 2027 and through 2028. Now, you've got to make some assumptions about which harmonics you choose and how you treat phase drift and decay. And they're sort of averaged in that ensemble mean, which is the red one. But it gives you a feeling for the uncertainty there, and they're all supportive. Okay.
Very good. So yes, so let's get more data, and we will know. In the meanwhile, we can look at all the different models. Anyway, and this comment is more a comment than a question. Complex banana on Bitcoin Power Law that mentions both. Okay, yeah, we can look it up. I guess this is a X account, maybe we can, yeah. So yeah, several people yesterday I saw that Nico, he has a very large German channel, and nowadays you can actually select the translation, not just subtitles, but actually voice translation in different languages. And I was basically hearing the English translation of this German show. And Olger, that is actually another Scientific Bitcoin Institute member, he did a very amazing job with very German precision. He was explaining the power law, yeah, it was almost 1 hour and a half discussions on the power law. So more people are covering it and talking about it. So yeah. Good, guys. We will be here next week again. Yeah, same time. This is the time it works. I know that is not ideal for US people, but yeah, we're trying to coordinate between different continents. All right. Thank you so much. We will see you next week. Bye, everybody.
Thank you all. Bye.